You already knowing we are back once again live with them Hollywood trades. We have some interesting stuff going on gold. I know a lot of you people wanted to see the Reapers in action. I'm going to start out with that because a lot of people are always asking me why I have the warning watch for Reaper on the chart. So what'll happen is these FEGs in the discount range, right? They'll pull price. So that's the first key to spotting a Reaper. Is like, all right, you got the stretch, then you got the discount range, right? Anything below the 50% is the discount range. Anything down here in balance wise is subject to possibly becoming a Reaper. And seeing as how this one did not allow price to close through it, um, we would just mark this one as a rebalance. It's the lowest one. You want to see that lowest imbalance up against the order block really act as support, because now the system doesn't have to really go down there for anything. The actual order pairing system doesn't have to register anything that needs to be paired there. So pretty much the bots are like, okay, we got all the orders there. That's what they're thinking. That's what they see. That's what they're programmed for anyway. And so we do have the break and retest level easy. I haven't added anything in the last session since the drop. On the drop, right? We responded to the OB, so there was nothing marked in any of these candles except this was the breakaway gap. Boom, breakaway gap usually happens between 50% of the whole stretch. So around that 50% mark, you're gonna get that breakaway gap usually, and that's just what you see. If you get an order block, right, and then you come up to that order block in this capacity, right, this is already a bearish controlled range right here. So you have access, bears have access to this range easily. That's what this range means. That's what candles mean. That's what price action means. In this range, they easily took control in this range. So this is where it started from. You go back to its origin. What do you get? Sometimes, and that's why we call them order blocks, sometimes from that original block of orders, you get another. And so right there, you get 50%. That's just all, that's just all flexing levels at that point. But uh what we had there is the breakaway. We marked that. We marked this. This is the first thing we marked, because once we close below this, then you send that arrow and you target this structure here. You should easily be able to target that whole structure where the bears took over. So that did happen. We did mark this as a break of structure level here. I definitely am very interested in that level because it is also the 75% fib level. And so that's very intriguing that they're using the high of this candle as the 25%. They used the high of this imbalance as a key level as well on the fib. They're using a lot of these. Sorry, I said 75%. That is fib golden zone here. So this is what we have there, and we didn't quite make it to the 90%. You always want to stay above. You are green as long as you stay above that 90%. You are really green. You want to definitely see very much sensitivity in this level, in these levels here. These are all 50, 60, 62, 63, 64, 65. These are all levels up into the 75% fib level. So pretty much target of this imbalance did happen on this session, um, but we expected it to fail as this is a bearish range, as you see over here. We're taking notes on this range right here. And so taking notes on this range, I didn't have this drawn out, but I was very interested after I saw the 50% here. I guess I did want to kind of remind myself that this whole zone here is a key. This whole thing here is a key zone. Like basically this whole range here of the imbalance, the previous imbalance. Uh, so we're right. We go up into that zone now as a break and retest. of that zone right there. You want to see the 50% of these zones act as a very straight point of access of order flow. So, pretty much geeking out on this range because this is the scalper's range. This is where we thrive on the scalps. We verify the pip range. We don't try to predict price, but we enter on reactions to candle highs and lows. That's what you do here. You don't predict price. You just try to get a certain amount of pips, whether that be 100 pips, 200 pips, 50 pips. You pretty much are that's how you scalp in these ranges. You don't want to be scalping all the time because you don't interact with these candle ranges all the time, only on in certain time periods after the new candle starts, then it has a reaction that you can get from the previous candles level. And some of these interactions can be really easy to read if you just wait for them to either leave out and pull back into the candle range, or and that's usually what your scalp is. It'll leave out and it'll pull back into the candle range. That's usually what'll happen in these tight ranges. And so that's where we thrive. The better you are with your levels, the easier that process is going to be as well, because you're also responding to key level zones where you can expect a certain outcome out of those zones. And so, pretty much with that being the case in these ranges, people who are trying to predict direction of price usually lose their accounts in these ranges. Um, you know, a lot of people are probably a lot of people who were shorted and are just trying to ride this whole correction down this daily path of retracement or correction. They're going to be up thousands of dollars, right? And if you take that profit, and all of us have done this before, you take that profit and then let's just say you try to buy, right? And then you get stopped out. You try to buy, you get stopped out. Or let's just say you try to buy right here, you want to go back up to the all time, and then you get stopped out, and then now your account is all depending on the leverage. You're trying to replicate that same high again, like a lot of us try to do. Anyway, with that being said, we can also pay attention to what happened every time price balanced a time frame and didn't close below it, because when we close below it, that markup changes to the inversion. And so without that inversion, when you get these balanced ranges like this and fail to close below them, we've been seeing what prices has been doing at these ranges. This is also the first time it's visiting this order block. And I already said, when we go bullish, we don't want to close inside of this. That's why I said we're bullish. A lot of people didn't understand what I meant when I said we're still bullish. When I say that, what I mean to say is your bullish support level, which is going to be your bearish candles, where exchange was happening between the two cycles. Your order flow right there should act as a stiff boundary level. Anywhere between here and here should act as a stiff boundary and just allow price to just catch that deceleration, right? You already corrected the imbalance. Boom, boom, boom. Once we started closing bearish up here, once we started going bearish up here, we already knowing that we're gonna stop at this order block. There was no other. There's an order block down here, but we're not even. There's no guarantee we can even get down here right now until we deal with the liquidity from this order block. I'm not saying that it's going to stop price from going down lower, but we have to deal with the liquidity in this block. And so that's the thing that a lot of people can't math out. They think in terms of one-sided direction, or they think in terms of extended deliveries always. Some people think like that, like, oh, there's always an extended delivery. Yes, there is, but you have to deal with um, certain levels. As a matter of factually, this was going to stop price here. It was pretty much a 90%. I mean, there's nothing 100%, 90%. And 9 out of 10 times, we should expect this to do what it's doing right here. And so, with that being said, I haven't marked it yet. Anybody who knows these imbalances, you would already have had that marked or eyeball. And I eyeball a lot of stuff unless I'm showing um like I'm doing now on a lot of these videos. I actually show more markups than I would actually mark. but it's good for education um, to mark them on screen as well. So you see what I did? I just took that low to that high and then, tidied it up. I don't like seeing a lot of markups because I don't like to have a certain idea before that idea is possibly formulated. Like the idea that it would come back into this imbalance or use this POI in any type of way has not formed yet. I don't have the bullishness. I don't have the bullishness for this to even be a calculation in my measurement right now. I'm not there. I know that this high right here is we want to short from above this high. This is the lowest daily candle right now in the range, and it's a bearish candle. You want to short from above bearish candles and from within bullish bearish impulse ranges as well, like this. So we expect the same thing that we saw here in this bearish impulse. Oh, it starts looking familiar, right? It all starts looking familiar. um some people say patterns, right? Patterns will repeat on every time frame, but it's really liquidity interactions. There's just a lot of shorts above this high. This is why I don't need to draw wedges like a lot of people would draw these wedges and this and that and then come the other way and do all that. But I don't need to do that. I just need to know exactly where those liquidity interactions should be at. And it's easier to see on the candles. Some people are gifted. Some people are very gifted with reading the tape, and they can take advantage of, okay, so this was this. Let me make this. I feel like a lot of people don't draw it accurately. So let's go from the black candle. So let's go down, then we'll go up, then we'll go down, then we'll go up. I'm making the wick of the white candle now. Boom, that's the wick of the white candle. And then we went oh no. We went up. I'm sorry. I did that all wrong. Please forgive me. Down, we went down, right? Boom, right? Exactly. Boom. Then we went up, then we went down. Then we went back up. This is the wick. These are the wicks. Then we go back down. Right? So that's that completion. That's the completion of that move, right? And before we hit the high of this candle, we go back down, right? All the way and clear previous structure, right? This is the wick. It stopped right here. Boom, right? Now this is the next wick here, right? And so this is the lowest candle. I'm doing this candle here. I'm doing these candles, right? This is the lowest candle, right? So you sweep this high, right, from this impulse range. That's an impulse range. Then you have a high that exists within the impulse range. You sweep that high, boom, and then you come down. But that's not what has happened as of yet. So as of yet, we have come down, we have come up. This is where we exist right now. This is where we exist right now. And so next, and we got the zones. Obviously, we're in the zones, right? So I'm drawing what's happening to the right, what's happening here. So a lot of people don't understand the liquidity inducement interactions. This is pretty much it in a advanced breakdown. I usually don't do this because I only have a few minutes left here, and I don't like going beyond 15 minutes. But this is a lot of people have been asking about like deeper like liquidity inducement interactions, candle range interactions, and so now we're here, right? We have the hottest candle. So now what we really want to see is, right? We want to see something like boom, right? We want to see something like this. We want to see it break the high of all of this and come up here, do something like this, like that, soup this new high that's going to get created in here, and then do something like that and come back. If it does want to come to this order block down here before we ultimately do something like that, eventually after we get the weekly low, we need a weekly low to be swept, and we'll just clear this whole range like magic. And that's usually how price action works. That's how liquidity works. It's using each one, and then you go to the weekly. So you can't, what we're showing here, you can't even show on the you can't even show on the weekly, because the weekly is just an easier interaction. The weekly is right. All we did was come up, come down. This is the highest candle. We swept the low of the highest bullish candle, but now this is the highest candle. So when this candle closes, we want to sweep the low of the highest candle to get access. So we're double forecasting. We're forecasting a double sweep off of basic candle mechanic understandings. Like, this is the highest candle. So this candle has the reference for the range. A lot of people don't understand just the basic mechanics of candle range reference. And so this is already, I would say this is right now we're testing this. There's no definitive answer what we got here. Obviously, this is the fair value gap. We do have deviations that we measured from previous, and that's pretty much it right now on this gold price. I don't have much else to say. Of course, obviously, we always can go back down, and I'm gonna go back to the beginning of what I was saying about the Reaper range. If you take that range, you see where the Reaper came from. It's on a different time frame. It's also actually on this time frame as well. Holy, it actually was a 1 hour fair value gap with a 4 hour fair value gap, because that's where it came from, the 4 hour right there. Or did it come from the hourly? I think it came from that. So this whole range would be the Reaper. Or did it come? Yeah, it did. It did. And so pretty much that hourly, yeah, that hourly right there. You see how it's interacting with this level. So it interacted with this level twice right here. Boom, boom. This is a sharp liquidity level, right? And then you come to it and you interact, you come through it and you just start doing weird things. It's like a fulcrum point. The Reaper, you wanna watch out for that Reaper. I always say around a Reaper, it's like a black hole. It's an orbit. It has its own orbit of orders, and this is like a black hole has a what do they call that? The event horizon. So everything around this Reaper is like an event horizon, and it's a fresh Reaper interaction. So it's trying to gain fair value here. This is a lot of orders. You can pretty much kind of say that there are a lot of orders kind of messing around. It's by evidence. Usually these Reapers, I find them by evidence. So when I see, it might be an IFVG or FVG or something that I have marked previously that I won't even pay attention to until I see it acting as this fulcrum point right here. And then I'm like, oh, okay. So now we can use this Reaper as a reference for what's really happening in price. And as we see, we are still using this rejection block on all the time frame as well. That wick right there. And that's going to be the last thing we have time for, is to look at this rejection block and see how it is still acting as support. Um, this range was a really nice bullish range. Of course, you could throw a fib on it if you want to and do all that stuff. But right now, we're really just geared into what's happening at these key levels. The breaker had its interaction. And so what we'll have here is, yeah, we closed below this candle, but we did not close below the FVG that was hosting this candle. So that's a no-go. So we are still bullish right now. The Reaper is pulling us back through. That's pretty much what we get right here. Fibonacci reaction, and a new order block reaction here. That's pretty much that. Yeah, we will trail this. This was a little more of an advanced lesson. And so we will definitely trail this price and try to keep you in the know. Go ahead and share this with somebody who wants to see some crazy levels to trade from and get you some crazy ideas on how to run this price action. You see it's going up. And see y'all next time.